Well, it's time for a preview on what to expect for Tesla earnings coming up on July 19th. I will be covering the Tesla earnings live, so I hope you join me there. Keep in mind, next coupon expiration is next Wednesday on FOMC Day. Join me, get lifetime access to all the content, new content, and the course member live streams linked down below on either stocks, real estate, or how to make more money in entrepreneurship or at your job, featuring our AI lectures linked down below to actually be productive. So let's talk Tesla. Look, as much as people like to sit and crunch, okay, we delivered this many cars and that's going to lead to X dollars of revenue, let's make this very simple. This is the quarter Tesla took some of the most price cuts that we have seen in the last, really year. Most of them happened at the beginning of this quarter. So there are some real concerns about, obviously, number one, margin. But it's not just number one, margin, it's also cash flow. And this is something that I have religiously been warning about in every single Tesla video that I've been making. I've warned that Tesla's balance sheet is not as robust as it appears. That is okay, though. It's a manufacturing company. They must invest. Consider, for example, the manufacturing expenditures that a company like Intel undertakes, just so they can build fabs to manufacture advanced chips. They're going to be receiving some of the first 3-nanometer lithography machines from ASML. They'll probably have their machine up and running before even TSM, which could potentially be a nice reboot for Intel as their revenue sort of declines on the CPU side and gets more into sort of brand agnostic fabs. Point is, when it comes to manufacturing, you have to spend a lot of money investing. And this is what you want for a company. But don't be surprised if Tesla actually and potentially goes cash flow negative this quarter. Partly because we might be at either last quarter was the bottom in margin, or more likely this quarter may be the bottom in margin for Tesla. A bottom read in margin is going to create some nervousness for Tesla investors, especially if that free cash flow number goes negative. Take a look at the last earnings update from Q1. Free cash flow declined from somewhere over $1.8 billion in prior quarters to just $400 million. Now, $400 million is great, but if you couple that with the potential for declining margin, you might end up going negative on free cash flow. And I've been warning that Tesla is very likely to end up raising money. Now, what I thought was very interesting is there's some commentary that Tesla is making another attempt at pricing in an asset-backed bond sale. This is something that they wanted to do last year, raise about $1 billion to an asset-backed bond sale. And really what they're trying to do is securitize their leases. Now, some people think that Tesla's going to try to get into more of their own financing opportunities, specifically with direct financing offers for customers. What I believe is really happening when I look at this $1 billion suggested lease securitization offering is, in English, Tesla's like, yo, y'all, we need to raise a little money. How can we raise a little money without diluting the shareholders since we put them through hell over the last year? Thanks in part to Elon dumping $24 billion, which was still $9 billion more than what retail sold. What could we do? Well, how about we take all these assets that we have, which are leases, providing us residual income, and why don't we take those leases and try to slice them up, or the equity in them essentially, and raise money with those. This is sort of an explanation. It's not actually what's happening, but it's an explanation for essentially what is backing these bonds. It's leases. So Tesla is kind of like breaking a piggy bank, saying, okay, let's raise money based on the fact that we have this recurring revenue here through leases, and we have these as assets. Let's use that as collateral for doing a bond offering, rather than maybe diluting shareholders. It's still going to lead to more debt for Tesla, as it would offset some of the asset that they do have now, but they would receive that cash, which would help a lot of their building and their build-outs, obviously, because where are we still building? Giga Austin, Nevada. You're building out in, obviously, Germany and now Northeast Mexico, and then potentially expansion plans for Giga Shanghai, which, mind you, All this talk about China stimulating and trying to stimulate their economy, personally, I believe they're likely to do what they've done historically, which is corporate welfare. In order to stimulate the economy in China, China likes to say, hey, let's make it easier for manufacturers to build. Let's bring manufacturing to China again, versus everybody trying to suggest that they want to start building in India or Vietnam, Apple threatening and otherwise. Let's incentivize these corporations to stay or come back to China. I expect that. But you don't want to build that into your models for Tesla because you should always expect the unexpected. And I think what you should really expect going into this next earnings report is a likely lower margin, a margin bottom, probably somewhere around 16, 17% margin. That's likely to lead to a negative cash flow read, free cash flow read. And then we get to a negative free cash flow read. We're going to couple that with this bond offering, securitizing those leases. And Tesla already, look, hey, we think maybe, I would hope, at least in commentary, they say that they think they've hit a bottom in margin and that they're covering their weaker cash flow this quarter with the bond offering, and they don't think they have to raise money again in the future. I highly expect Tesla to say something like that if it is true that margin has hit bottom. If margin hasn't hit bottom, well, then there are probably more issues. So, now, when it comes to the balance sheet, which I've complained about many times on Twitter and on YouTube, people just don't want to hear it, whatever, I'm just going to provide it anyway. Oh, by the way, have you seen this? Look at this. Omar posted this on Twitter. Let me quickly digress here for a moment. Omar posted on Twitter, someone check on Gary and Ross to make sure they don't faint. And here's really this magazine, full page ad showing Meet Model Y, the best-selling car in the world, is on display at Goodwood. Drive it yourself at tesla.com/drive. And I quote tweeted this and I said, Meet Model Y? Hey, Elon Musk? Love it. Keep it up, Team Tesla. It's true. I love it. I think it's awesome. Now, obviously, a lot of people in the comments are like, oh, hey, this is paying homage to the fact that, yes, you, Kevin, went to the shareholder meeting and convinced Elon Musk to advertise, which is great. I'm very happy Tesla took the suggestion. Many people have been making the suggestion, so I credit the entire community. But it is kind of cool. Who knows if there's a correlation? Just wanted to say, even though I digress, I think it's kind of cool. And I think it's got a good ring to it. Personally, if I could give some unsolicited feedback, I don't think it would be too terrible to maybe have a little byline over here at the bottom. Just some, cute fact bubble that you put up on every Tesla ad where you say something like, I don't know, just as an example, did you know we send software updates to, increase the safety of your car on average every 27 days or whatever, something like that, right? Little fun facts like that, where every time somebody sees a Tesla ad, it's almost like an engaging game to look at, oh, what's the fun fact in that ad? And it not only excites existing owners and gives them ammunition to talk about to their friends and families or whatever, but I think it also then becomes informative. Now, I understand the goal of this magazine ad here is to inform people that they can go test drive the vehicle, which I think is fantastic and a great way to sell the cars, get people behind the wheel of these cars. So, for what it's worth, I appreciate the simplicity of the ad. Little bubble strategy could be interesting, but it's just an idea. It might be worth A/B testing, supposedly. Okay, so let's now look and understand the balance sheet here. So, look, I have a unique way of looking at balance sheets because I'm very aggressive, in my opinion, with what I think of balance sheets. I think balance sheets are extremely important. They are only second important to the cash flow statement. Cash flow statement is what I start every single fundamental analysis off with. And so cash flow's great, but we already know these cash flows have been condensing and shrinking. Again, free cash flow, somewhere around $400 million. Now, what do we have on that balance sheet? Because every time I talk about Tesla potentially needing to raise money, people are like, why would Tesla be raising money? They have $22 billion of cash. Oh. Yes, congratulations. Somebody's able to read one line of a balance sheet. And yes, indeed, Tesla has $22 billion of cash. But good Lord, maybe one day people will actually read a little bit further down the damn balance sheet. And what do you get? Oh dear. You get accounts payable. And what do we got over here? $16 billion, we're going to call it. Accrued liabilities, another 7.3. So let's add this up. We're going to add it up. So we're going to get 16 plus 7.3. A little bit of rounding here. Deferred rev, we're not going to add up. Deposits, we're not going to add up as a liability. Current portion of debt and finance leases, we can go ahead and throw that in. That's another billy right here. And longer term debt we'll ignore right now, although it has been somewhat growing. So what do we have here? We've got about 24.3 in current bills, right? So you've got $24.3 billion in bills to pay. And yes, that is offset by $22.4 billion in cash. Now, of course, then people argue, oh, but Kevin, they have inventory. Yes, and that goes into the future cash flows of the business. And so if the future cash flows of the business go negative, then that inventory isn't really helping you with your cash balance, is it? Anyway, so again, I like to be aggressive and just at a, on a 20-second analysis of the balance sheet, just make it clear. There are more bills on the desk than there is cash at this point. Yes, as they sell more cars, hopefully that cash flow increases and we're well able to build that cash position again. We're just not there right now, especially given that capital expenditures are likely to grow. Now, I'm not a bear here. I'm just saying, just be prepared for earnings. That, if we get a margin bottom, then we get a negative cash flow read, and we get an offering, the stock's probably not going to be very happy, especially since a lot of people are blinded by Tesla can do no wrong. $22 billion of it. Oh my gosh. Okay. So just be prepared. But this is good. You want Tesla to spend on Capex. That's the point. It's like what I started off with Intel. You want capital expenditures. Very, very, very important. Kevin was talking to my friends who have a massive Tesla, whatever, seems to know something about cash raising. He said they won't look at the cash pile. They have $20 billion. Ducky Gaming, I don't really know what you're saying here, but it sounds to me like your friend's kind of giving that same argument that other people argue again. It's, oh, they got $20 billion of cash. Again, it's like, dude, you know what? Let me put it this way, okay? Let me put it this way. If somebody today gave me $1 billion of cash, and I set $1 billion right here, and then I put an invoice due in 30 days right here of $1 billion. Do I really have $1 billion in cash? I mean, maybe I can invest that for the 30 days, and I could try to arbitrage holding on to that cash. But let's be real. Am I a billionaire if somebody puts $1 billion on my desk? And then I got bills of $1 billion on the other side of the desk. Am I a billionaire? No. Right? Anyway, again, okay. So let's move on from this. Last thing that I want to say is what we want to also pay attention to is we want to look at forecasts for quarter-over-quarter growth rates. Okay? This is also important. So what kind of forecasts or hints could we get potentially for the next quarters? Right now, Wall Street thinks Tesla's only going to really be able to grow at somewhere around 25 to 32% annual compounded growth for the next few years. Your Tesla hyperboles think that's going to be closer to 50%. And then you got your moderates in the middle that are going to sit around, I'm usually around like 35%. And then some people are like, no, Kevin, it's 40%. It's like, okay, whatever, 35 to 40%, whatever. We had in the Q1 to Q2 an annualized rate of growth of about 40%. If you compounded that, you'd get to about 48-ish%. I don't know, though, that we have the right indicators to suggest that we are growing quarterly deliveries at 10% compounded, but we are on a speed trajectory of somewhere around 40% growth. So we'll see what happens. And we might not actually get any kind of guide here, so that's why I'm keeping that towards the more towards the end of the Tesla segment. Big fan, though, of obviously just be prepared. Margin, cash flow, money raise, it's not a big deal. It's all totally normal for a manufacturing company. If you want to see spending, okay, you really want to see spending, why don't you jump over to the Intel report? You go to the Intel earnings report, and then you could really see some spending, a little bit of spending, maybe a little bit of spending. But anyway, Intel is spending a lot. Let's look, for example, over here. This is the cash flow statement for Intel for the 3 months ending April 2023. We have net income, a net loss of $2.7 billion. We then jump over here to cash provided by operating activities, 1.7 to the downside. In other words, they lost about 1.7 in cash from operations. So Intel's losing money from operations. They're obviously going through a big transition. A lot of people see them as either value or value trap. TBD, which happens. But look at this, folks. Additions to plant, property, and equipment, 7.4 billies. Imagine if Tesla came out and said, oh yeah, we're negative $9 billion of free cash flow like Intel because we're building factories. So when you look at it this way, even if Tesla goes slightly negative on free cash flow, it's nowhere near what some of these other companies are spending on manufacturing. So it's fine. Like in the long term, again, this is what you would expect for a growing company that's ramping factories. There's nothing wrong with this. So very excited. Obviously, there's always some nervousness that goes into earnings as well. Not a big deal if you're a long-term holder, but it still is a psychological thing too. You want to see the company you're investing in is performing well. You don't want to end up stuck with something like a Disney, where you invest in Disney for 8 years. 8 years ago last week, and you put $100 in, and what are you left with after 8 years? $76. Yeah, not so great. Anyway, so that covers our Tesla segment. Now, I want you to know this. When it comes to AI, time is what's going to make you money. And if you can prove that value to an employer, you'll always be able to be employed. So this is another way of making sure that you don't get replaced by